Hi, everybody. I think we are live. So here we go. This is my post market wrap up. People have been on me lately for not saying the date at the beginning of these live streams. So let's do that here. It's Monday, February 27th, 2023. All right, people, look, let's sit back. Let's take this in. Let's relax just for a moment. Hello, everybody. Just saying hi. Anyway, let's start off with some basic stuff, and then I want to cover some more in-depth things with all of you. With that said, let's look over at this market. The Dow was up like 370 something points earlier in the day. Well, pretty much we finished with a little gain, about 70 somewhat points on the Dow. This market does not like, in my view at least, the action we're seeing here in the debt market, for which I want to talk more about that. But okay, so a pretty volatile day in the stock market. If you were to look over at the MMRI today, you would see it was pretty erratic. Okay, up and down and up and down. We had the 10-year yield 3.92, relative Dow Street lower today. Despite that, gold did finish with a fractional gain. Silver, unfortunately, suffered a little bit of a loss, or fortunately, depending on how you want to look at it. This thing here is no bearing whatsoever on reality. There's no price discovery here. When you have an asset, and we're talking about real things that are deriving value from something that doesn't even exist. It's not on the elemental chart. I'm talking about the paper derivative. Well, then there's a big problem, and I think we can pretty much agree on that. Now, with that said, we got cryptocurrencies under pressure today. Natural gas, you're watching natural gas, pretty epic. Pretty incredibly, I would say, insane swings as of late with regard to natural gas. Crude oil today falling under a little bit of pressure. That's where we stand. Now, with that, let me say this real quick. In my opinion, and I would believe most of you would agree with me, we are seeing increasing instability here in the debt market, and it does not appear to be any direct intervention by central banks, the Federal Reserve in this case. I've been telling all of you for a while that without direct intervention from the Federal Reserve or central banks, all of them, thank you, take action, to stabilize this debt market, this is all going to get very real and very ugly very, very fast. Warning after warning, Rickards and Burry and no less than 4 Wall Street banks. Did you hear JP Morgan today? JP Morgan today equating the Federal Reserve with God. Yeah, you heard right. I think their compass is a little bit off, but in reality, the Federal Reserve does control everything. They run the world. They run the world's economy. They actually control the flow of information. You know this. So I guess in some ways they are some kind of freakish figure here. I would definitely not call them God, but they do run the world at this particular time. Thank you, CB Housley. I appreciate that. Anyway, just real quick, again, exactly, without direct intervention, indirect, I don't know how that would work. These debt markets need to be manipulated even more so than they actually are. Speaking about that, so I don't know how many of you are familiar with Kathy Wood. She's the CEO of the ARK Investment Corporation here. This is a quote. She said this: "I have never seen markets this disconnected." I think that even deserves a big fat duh. She's completely right here. Now, how about this? So Janet Yellen stain, the yet to be, let's just do her. Janet Yellen made an unexpected, unannounced trip over to Kiev. Oh, yeah, she's over there in Ukraine right now. And she's assuring those people over there that the United States people, well, we're going to give them all the economic support that they could possibly want, and then more. Thank you, Wayne. So she's doing this, of course, on our dime. Do you realize who is she? She's the U.S. Treasury Secretary. She's over there promising that we're going to, bankroll their economy. How do you feel about that? We can't even bankroll our own economy. But what is this? This is a mechanism to pull cash from the future into the now. Without this mechanism, we go back to Mad Max. Speaking about that, I want to, before I keep going on about all this, What I really want to do today with you, pretty much every week, I write up a paper like this, and I cover it here with you, and I kind of ad lib to it, and then we'll cover some questions. Now, if you do subscribe, and I hope you all do here, to my free newsletter, this is in your inbox right now, so you can have your own lovely copy. So what I'm going to do is I'm going to cover this with you here. Can you see that? And I'm going to ad lib as we go along here. So let's see if we could stay on the same page with this. Here we go. Title. Are you ready for this title? Because it's a nice one. The entire world's financial system is rapidly deteriorating. I think that pretty much sums up the situation we're in right now. Wouldn't you agree? I mean, that's exactly what's going on here. It's kind of a slow motion train wreck, but it's becoming very real for a lot of people. Anyway, so here we go. The single pillar which supports the entire world's financial system may be about to break. I would go as far as to say that it is breaking right now. Not that I wrote maybe, but I think it actually is breaking here. The backbone of the world's economy, stock markets, and indeed the financial system itself is showing clear signs of coming apart. Don't take my word for it. There's a lot of other people here, even Kathy Woods today, this big disconnection. What do you think she's referring to? Okay. It's not just Greg Mannarino. I'm not pulling this stuff out of a hat. Listen to this. It is by no coincidence whatsoever that at the same time the world is being thrust into yet another world war, the financial system itself is becoming rapidly unstable. Are we on the same page? I believe we are. If you consider that today globally we are forced to survive in this crisis to crisis state of affairs or mechanism, okay, with each new crisis demanding ever increasing debt. Why do you think they flew Yellenstein over to Kiev now to promise that there's going to be more economic stimulus for the people of the Ukraine, but none for the people of the United States? Interesting, isn't it? Yeah. But that's what they do. It's just the mechanism. And you can see it playing out right before your eyes. Now, we should all expect that yet another crisis, possibly much bigger, how about definitely much bigger, will soon follow. That's how the mechanism works. It can't function normally. It's crisis to crisis to crisis. And every single crisis requires more funding. You understand? Okay. Moreover, the system itself has become so toxic and overburdened with ever increasing debt that without these engineered crisis to crisis mechanisms, the system itself would cease to function. That's the truth. It is certainly no secret that at its core, the system itself demands exponentially increasing global debt. And again, at its core, the world's central banks are the ones who issue the debt. Like JP Morgan alluded to earlier, in some ways, these central banks do believe that they're God, and they're going to pay that. They're going to pay a price for that. Now, if you have followed my work, and I'm sure most of you here have, I have outlined for years that at one point, the issue of global debt would reach a moment of maximum saturation. How many of you remember that? Maximum saturation. Okay. A moment of maximum debt saturation is achieved when the system itself starts to break down. And we are seeing that now. And here are a couple of signs. With the first sign being rapidly worsening global inflation, okay, which we are seeing right now. The next phase of the breakdown, and we're seeing this as well, of the system would be central banks collectively, falsely attempting to fix the system by attempting to rein in global inflation. It ain't working, which is something, again, we are seeing right now. I hope all of us are on the same page so far. Let us now move forward here. Let us be clear, okay? Let us be clear on this, people. There is an extraordinary charade being played on the people of the world by central banks, the godlike figures, according to JP Morgan. And this pretense is being pushed upon an unknowing public. I think you know where I'm going with this. It is the mainstream media outlets being told to push the false narrative that central banks are now somehow battling. They are battling inflation, rapidly rising inflation, by raising rates. This is a deception. Okay, I've covered this a million times, which was never even meant to work. All raising rates does is crush demand by hurting the consumer or killing the consumer. It's not even meant to stop or even reverse rapidly rising inflation. That's the charade that's being played on the people of the world who have no clue. Now, let's move on. Could central banks stop and even possibly reverse rising inflation? Absolutely, they could. Okay, freaking isn't in here, but absolutely is in here. But that would require central banks to contract the money supply by having financial institutions raise their capital reserve requirements. You and I both know this is never going to happen. Never. Okay. Understand, central banks have absolutely no interest at all in contracting the global money supply, because it will prevent them from inflating, and inflating is what they want to continue to do. Henceforth, you're going to see global debt balloon much bigger than we have right now. Now, I'm going to let you in on a little secret here. So you want to know another secret. If a central bank was preventing from issuing a single dollar, you know this, you've been following my work, of more debt, just one lousy stinking dollar, that particular central bank dies. If we were able to stop, listen to this part, it's very important. If we, all of us here, there's over 1,000 of you here, were able to stop a single central bank from issuing $1 more debt, the entire system breaks down. It's a domino effect. Bang, 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 bang. We could shut down the central banks if we could prevent them from issuing more debt. But when you have a mechanism like this, for example, Janet Yellen going to Kiev, promising the people of Ukraine that we're going to bankroll their entire economy, how can we ever stop it? You see, we have no power. What are you free to do? You feel like you live in the home of the free, land of the brave, whatever the freak these catchphrases they use these days? Ain't true. You're not free to do a damn thing. You're being forced into debt servitude. And I think we're pretty much on the same page. Yeah, straight up that freaking gabagool. Exactly. Anyway, here. Let's move forward here. The glaring sign, please pay attention to this, that the single pillar which supports the entire global financial system breaking can be seen in the growing instability of the world's debt market. I think it's pretty much in our face here, people. And we can see this breakdown in real time by witnessing today that the global debt market is selling off. And what have I been explaining? What have we discussed over and over again? Without direct intervention from the Fed, this is just going to all end real fast. Now, the sell-off in global debt markets is causing bond yields to rise in an uncontrolled fashion. This is going on. The fact is this: if we continue to see the global debt market break down, which we are, and central banks do not directly and immediately, I've been telling you this for weeks, intervene to stop it, the entire world financial system will collapse. And that means we are going to get a credit freeze, meaning the entire system is going to lock up. No transactions. That's it. It just ends. All of it. You can't get your cash out of the banks, ATMs, nothing. It's just done. That's where we stand, people. I think most of you would have to agree with what I wrote in that paper. And then, like I said, that's in your inbox right now if you subscribe to my free newsletter. If you don't, link in the description down here so you can sign up for my free newsletter. Hope you don't miss it. Anyway, people, with that said, exactly. Illiquidity. That's the problem. The system is illiquid. I'm just looking here at the comments. All right. The entire system is insolvent. The entire system is illiquid. And no how much debt is pulled into existence. Thank you, Stephanie. No matter how many Janet Yellens they want to float out around the world to promise that we're going to stimulate their economies and bankroll their economies, it's not enough. It can never be enough. I don't think people are never told this kind of stuff. But that's the nature of the beast here. It's a freak show on an incredible scale. Lex Luthor. I think you're referring to. Don't do the ghoul thing. I think you're referring to Neil Cash and Carey. Yeah, I think he's going to be the next Fed vice chair. And that's a frightening thought because the man is possessed by the devil, in my view. I mean, I think the guy. I don't actually believe in the devil, but I think if there were, it would be Lex Luthor over there. Absolutely. You know what? Absolutely. This is true. Thomas Van Der Sman, the system has been dead since 2000. It's been on life support since that time. And it's just debt that's been pumped into the system to give the illusion that there's some kind of reality here. But again, let's reflect back on Kathy Wood saying she's never seen a market so disconnected. It's out of control. Anyway, it's so true. What else? What else here you want to talk about, people? What else you got? What would a credit free mean? Isn't the money on the banks? Yeah, credit freeze means it's just over. Nothing works. The whole system is just done. Again, the system must be pumped with debt every minute of every second of every freaking day. If this mechanism is not in place, henceforth, why they send Yellen out over here, another $10 billion over here, $100 billion over here, do whatever they got to do. The system is done. It must function that way. It can't function another way. That's the debt-based economic model at its core. And they already have a new system. They already have a new system ready to roll out, completely digital, completely fiat. It's just a matter of time. They need an event to occur here. I think a false flag is in the works, a big one, which is going to foster a much wider war. And I think there's going to obviously be a moment here when this debt market implodes. It's going to happen. I think we're starting to see the breakdown of the system right now. That single pillar I wrote about in that paper I just read to you, it's breaking all over the place. Thank you, Harry A. War, absolutely, Harry. You're 100% right. And that's the look. This whole system here, the debt-based economic model functions not only from a crisis to crisis mechanism, but it functions on perpetual war. War generates more cash for the system than any other endeavor on the planet, period. It gives central banks every reason on earth to continue to fund these wars. You've heard this before. Tell me you've heard this before. Every war, all of them, is a banker's war, central bankers' war. They fund it all. No developed nation on this planet, including the United States, does not have a war chest we can just reach into and send cash over here and weapons packages over there. We don't have it. It all has to be borrowed into existence from the Federal Reserve in this case. Again, this is what I'm telling you for the longest time, that the Federal Reserve has two balance sheets: the public balance sheet, which you can go right to the Federal Reserve's website and see, and then the off balance sheet. All of this war money and everything else is in the off balance sheet. Can't see it. No one can see it. And yes, you are correct, Purple Rose. War is bullish for the market. Don't take my word for it. Look back on World War I. Look back on World War II. Initially, the markets take a hit, but then they rebound substantially. It's crazy. And war is a racket. It's an absolute racket. And it's a terrible situation. Thank you, D1. So inflation is running, or rates are hiking. It's the truth. I mean, look, people don't even get it. We have an economy that's contracting at its fastest pace in history, although our brain dead imbecile president is going to tell you something different. You can't even, the things that they try to pull off are absolutely out of control. Again, what did Janet Yellen do the day we got the PCE numbers, the personal consumption expenditures number out here, which proves that inflation continues to rise, outpacing whatever the Fed said? She came out and said prices are falling. She came out and said prices are falling within the same hour, as a matter of fact. It's like kind of a damage control. You can't make this stuff up. It's impossible to do, people. But I think you all get it. I really, really do. All right, look, let's just cover a couple of more questions from you guys. And Lord Humongous, I love you, bro. You've been with me a long time. And we will not eat the bugs. I agree. Axiom Curve community, you guys are great. Thank you. When am I going to be on your show? Metals, yeah, that's how you're betting against the debt. Impact on the housing market? We haven't seen anything yet. Absolutely not, in my view. The consumer's getting destroyed. Is so absolutely disconnected from reality. It's a slave state right now. It's a slave system. You can't own anything. Oh, sure, maybe you can become a debt slave to something, but it's really where we're at, people. It's kind of insane. Oh, anyway, what else can we do? Let's do one more question from you. One more. Guns and gold. Look, how about faith, hope, charity, love? I think that's maybe even more important, honestly, for all of us. All these things are important. You do need a means to defend yourself. You need to bet against the debt, become your own central banks. But we need each other more than anything else. You can have all this stuff, but if we don't have each other, we got nothing. We got nothing. I've been telling you this for the longest. Coco, I'm sorry. Coco is not here. And I will bring him out. I forget. You know what? We're all doomed. I'm just reading this here from Stevie here. We're all doomed if we don't embrace what I tell you every freaking Friday. Love each other, care about each other, be charitable. Otherwise, we're done. Otherwise, we really are done. We're absolutely freaking done. Gold stocks. I would rather own the hard asset. Honestly, that's I don't own any gold stocks. Anyway, yeah, we got it. We got it. You see that is also brilliant here, Lord Humongous. You got to unite. We have to unite. What are they trying to do? Divide us all by any mechanism they can dream about. This is how the few have ruled the many since forever. It's a mechanism that just works. It's crazy. Anyway, I think we got it down, people. We got it down. All right, look, I'm going to end this here. It's 20 minutes. This guy, he loves you a lot. I mean that from the heart, people. We got this. We got each other's back. We know what's going on here. And like I said, get your own copy of that paper I read to you. It's in your inbox right now. Read it, share it, do whatever you want with it. And look, knowledge is power. Information is power. They don't want us to have this kind of stuff. Why do you think they have the propaganda ministry to distract you and deceive you and tell you to look here and you should be looking over there? It's the same thing. Like with this core number today, you got to be kidding me here. Great, we're doing fantastic. But if you look at this number in aggregate, durable goods, it's falling off a cliff. But what would you expect? That's what the Fed's trying to do. They're trying to kill the economy. That's their only goal here. Kill the economy, crush the consumer, create inflation with no end in sight. And that's it. That's where we're at. That's where we're at. All right, look, seriously, I'm going to get going. I'll see you all in the morning, and then I'll see you tomorrow again for the live stream, okay? Love you a lot. See you later.